If you're looking to buy Hyliion stock or interested by the company, then keep watching this video because we're going to look at the company's recent news, how the market has been treating it, and what are the technicals telling us. More importantly, we want to determine what would be the best trading approach given the current circumstances. As the market remains very volatile for the moment, we should be mindful of which positions to pick, as well as their individual timing and exposure. Before the video begins, if you would like to see more stock analysis videos like this one, please remember to like, comment, and subscribe to my channel. Over the past few days, Hyliion has been trading around 60 cents, and that represents a decrease of 70% over the past 6 months. For the past month or so, the sell-off has certainly slowed down compared to what it was, and probably even halted, and recorded just a slight decrease of around 6%, which is probably just the normal market tumblings around. I believe that the current price action is likely to continue without external changes, and this would mean that the market would have to be patient for another potential recovery. This is often a question surrounding the price action of Hyliion, and rightfully so. And this is that, what has the company done in order to deserve all this sell-off and to lose such an extent its value that has been accumulated over the bubble era? I believe that the key reason remains the change of fortune for the industry as a whole, resulting in a decrease in new investment. This increase of interest rate, as well as the decrease of electric vehicle outlook amongst the manufacturers, have certainly contributed to a drastically different investment environment. Look, like compared to what many people were assuming it to be many years ago. But with that being said, whilst for some companies it is a question of trust and transparency, for Hyliion the most likely reason for its decline may be linked to the overall economic trend. The company has little, if any, negative news except for its recent decision to solely concentrate on the add-on instead of the fleet. Of course, this is an important piece of information. It means that the company will not be developing a full-on AV fleet. But is that going to influence to this extent the fortunes or at least the investment outlook of the company? The answer is yes. And that is the rule of the game for this industry. Sometimes you're almost investing for the hype. Even though for me, at least on paper, it does make sense. It does make sense that many companies, given the current market outlook, is not going to want to switch, right? They don't want to invest a huge amount of money in something that may provide them very little. This is the fear of the unknown. But we don't know this yet. So this is why they want to commit like as little capital as possible for a quick investment and then go from there. So now let's take a look at the technicals. The trading volume of Hyliion is around 1.4 million shares versus the average volume of 1.3 million. Over the past 52 weeks period, the price fluctuated between 52 cents and $3.88. The volume of shares traded tells us how many shares are being bought and sold at any given point in the market, and if there's enough liquidity to support a trading strategy. If the float is thin, it would be very easy to influence the stock price, but low liquidity could mean the demand being very limited. When we compare the current volume against the average volume, there might be the possibility for trend reversal or breakthrough if the difference is large. For instance, if the stock were to break through, the current volume would be far higher than the average volume. The market cap of Hyliion is currently around $105 million versus the enterprise value of $188 million. As we compare the current price to the historical price fluctuations, the stock is 11% higher than the 1-month low, 11% higher than the 3-month low, and 11% higher than the 52 weeks low. On the options market, which often gives us a hint on the market sentiment on where the stock price is likely going to head next, the implied volatility is 274% compared to a historical volatility of 101%. The put-call volume ratio is around 1%, and it's normal for many companies to have a slightly higher put option volume than what they truly deserve, since many institutional investors hedge their long positions by buying put options. The most recent volume of options traded is around 41 contracts a day. Average volume over the 30 days is around 133 contracts. In terms of open interest, the most recent volume of open interest is 39,000 contracts versus the 30-day average of 40,000 contracts. Regarding the shareholder structure, institutional shareholders own about 26% of the outstanding shares. The biggest shareholders will include BlackRock, Vanguard, and iShares. It's always good to see some institutional participation when holding a stock long term because it offers a layer of stability and a token of reliability in the medium to long term. It means that the market is confident that it will deliver value in the long term, which is an important factor to consider for investors. I personally believe that the minimum threshold should be around 25% for institutional ownership. There are, of course, many exceptions to that rule, as there will always be great companies owned by retail traders for the most part. The current short interest is around 7% of the total float, with 44% of the transactions coming out of the dark pools. Typically, if the short interest is around 15% of the total volume, and that a significant portion of the short volume comes out of the dark pools, this may suggest that there are institutional positions taken to short the stock, and that there would be potentials for a short squeeze. Given that there is only 7% of the total float being shorted at the moment, this would mean that there's very limited appetite for a short squeeze, and that if anything, people may have a point in shorting Hyliion, in the sense that they may not believe that this company has too much of a future beyond its development of EV fleet that they have now put on pause. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, overall, I think that what Hyliion is going through is to manage the consequences of underperforming what they have overpromised, even if they haven't really finessed their numbers like Lordstown did. But honestly, this may not be enough in this day and age. We'll probably have to wait and see for a decrease in the interest rates, the picking up of investment into risky assets, and especially in the EV sector, to see its share price recovering back to where it was before the crash or anywhere near it. Until then, it's better to look elsewhere for great opportunities. I would recommend to commit between 1 to 3% of your portfolio in Hyliion overall, but an entry point at the moment may be too early to call.